Welcome to topic 3, double entries. We are going into recording of accounts, and to do that, we actually refer to worksheet 3.7, question 2. We'll first start off by trying to analyze the question and come up with the double entries. So for September 1st, they actually started a business with $3,000 cash and furniture of $2,000. Therefore, we can actually infer from this question that the owner actually contributed cash and furniture, which means it's part of capital. So the answer will be debit cash in hand 3,000 and credit capital 3,000. Okay, the reason being the business has increased in terms of cash in hand 3,000 and the owner has contributed the business for $3,000. The next set of double entries will be that the business has increased in terms of furniture. Okay, so therefore it's actually debit furniture 2,000, and because this furniture is actually contributed by our owner, so therefore it's actually a credit capital 2,000. Now on 8th of September, the business actually bought an office equipment using cash 2,500. So the business actually increased an office equipment, and because they paid out cash for the office equipments, they actually decreased cash in hand. Therefore, we actually have debit office equipment 2,500 and credit cash in hand 2,500. Moving on to 10th September, the business actually bought goods on credit from Sunny Bookstore 10,000. So whenever we see the keyword goods, we actually know that the business actually increased in terms of inventory. And if it's on credit from Sunny Bookstore, means that actually is a payable. The business actually owe a payable. So the answer for this is because it has increased in terms of inventory, increase in terms of assets, so therefore it's debit inventory 10,000. And since the business actually owe Sunny Bookstore money, it's a liability, so therefore it's credit trade payable Sunny Bookstore 10,000. Next, Meiting contributed additional 7,500 cash as capital. So the business actually increased in terms of cash in hand, 7,500. And the owner contributed additional capital. So intuitively, we actually credit capital. So this is the double entry. Debit cash in hand 7,500, credit capital 7,500. On 17th of September, there was a cash purchase of goods $5,000, meaning to say that cash decreases because you paid out cash to purchase goods, and goods being inventories increases. Therefore, your double entry is debit inventory 5,000, credit cash in hand 5,000. On September the 19th, you actually paid utility expense by cash $2,000, meaning to say your utilities expense increases, while because you paid out cash, your cash in hand decreases. Now, if your utilities expense increases, being the DAE side is actually debit nature, so when expense increases, it's debit expense, utilities expense 2,000, and credit cash in hand 2,000. Lastly, September 28th, there was a withdrawal of $1,000 cash for own use. Own use is a keyword, meaning it's actually drawings. And cash, the business actually decreased in terms of cash in hand. Therefore, we debit drawings 1,000, credit cash in hand 1,000. That's all for analysis of these accounts. We'll now proceed on to opening of accounts, recording the transactions in the accounts, and in the last video, we'll then close our accounts.